Disclaimer: the information, stories, and opinions presented on this channel are for informational and educational purposes only. The content provided is not intended to be and should not be construed as financial, investment, legal, or tax advice. Please consult with a registered professional for information tailored to your risk profile. Hey guys, welcome back. My name is Nobuhle Kumalo, and today we will be looking at tax-free savings accounts, or as other people refer to them as TFSAs. To start us off, let's look at a scenario. Imagine two people, each investing 1,000 Rand per month from age 25 to 55, in other words 30 years. And for simplicity purposes, let's assume that they are both investing in a stock or unit trust or ETF or whatever that averages 10% return per annum. Okay, the only difference between these two people is that one is investing directly into the markets, whereas the other is investing through the tax-free savings account. Okay, my question for you is, who will have more money at the end of the period? So when we look at bank accounts, who will have more money? Is it person one that invests directly into the markets, or person two that will invest using a tax-free savings account? Let me know in the comments. I am super excited to let you know what the answer is, but let me give you a second. Let me give you 5 seconds because I actually do want to see people's responses. Drop them in the comments. 5, 4, 3, 2, 1. Okay, the answer for this, you didn't even need to get a calculator. The answer for this is obviously it will be the one who invested using the tax-free savings account, and it's in its name, it is tax-free. Unlike the other person who, as much as they're contributing the same amount and they're getting the same return of 10%, as in that's their gain or return, and they're getting the same return of 10%, this person will still need to be taxed on their gains. Okay, we have capital gains tax. That means when they actually get the money in their bank accounts, it will not be 100% of everything that they've gained. SARS or whatever tax authority will still get a slice of that cake. So the actual cash that will be in their bank account will be less than the person who did the tax-free savings account portion. Both of these are still good. Both of these people are still rich. However, there is a slight difference of the one who got taxed and the one who did not. All right, so let's get into what is a tax-free savings account. So a tax-free savings account, sometimes referred to as TFSA, is something that is used across the world to encourage people to save and invest, where basically a tax authority says whatever money you make or you put in via this vehicle of a tax-free savings account, we will not tax you at all. 100% of it will come to you. This means any investment income, any dividends, any capital gains you could earn will not be taxed as long as they are under this vehicle. Unlike normal or traditional investments where you will get taxed on any capital gains, any dividends. So for example, if you were to invest 1,000 Rand and it grows and becomes 1,300 Rand and you decide to sell, the 300 Rand difference is referred to as a capital gain, and it will be subject to capital gains tax. Furthermore, if you have an investment and you receive a dividend, dividends are also taxed at 20%. Okay, so whatever you make, whatever you earn, your tax authority takes a cut of it. However, there are certain things you need to remember. Okay, just as a side note, give me 30 seconds because I want to explain this. But when it comes to capital gains tax, you only pay that when you sell the asset. However, there are also exclusions, so you only start getting taxed once you've reached a certain threshold. And then also with dividends tax, this is usually already withheld. So if you have received dividends from a local company, you don't have to make any further payments because the company that declared would have already withheld the dividends tax on your behalf. So you don't really have to worry about any payments. Okay, admin burden is on the company. However, if you are receiving dividends from a foreign entity and you earn less than 10%, you will have to pay taxes on that and you will have to declare it in your return. But for the purposes of the tax-free savings account, you don't have to worry about this. This is none of your business because it is tax-free. Okay, so I know you're probably wondering, why not just make all investments a tax-free savings account? Like, why aren't they all under the same umbrella? So that we don't pay tax on them. You could, okay, you really could, but it depends on how much you're planning to save and invest over your lifetime, because there are unfortunately limits to tax-free savings accounts. So if you want to save and invest a lot more than the limit, you would then look at these other traditional or normal stocks. Okay, but let's get into the limits. So first limit is that each person is only allowed to contribute 36,000 Rand per tax year. Similarly, each person has a 500,000 contribution limit over their lifetime. And then also lastly, you usually don't have much of a choice in terms of your tax-free savings account, like what you want to invest in. You can't pick a specific stock and say, oh, I want this company or this company. It's usually like ETFs or unit trusts or any other collective investment schemes. So you don't really have much of a choice. It's usually a basket of a lot of things. However, I like to think that this is also a positive, because it can get a lot complex when you have to nitpick and stock pick. So someone already having a predefined basket sounds like a bonus to me. But the other bonuses, or rather the benefits of having a tax-free savings account, is that one, there's no limit on the amount of growth. So there are limits in how much you contribute. However, those contributions get invested and they can grow, okay, depending on how the market is performing. So as much as those limits exist, for example, in your lifetime you can only contribute 500,000, your balance can actually be way more than 1 million because of the stock market growth. And also you can use this money whenever you want. There is no lockout period, unlike retirement where you can only access it after a certain age, or like other products where they are locked in. Your tax-free savings account can be used whenever you want. And some of the things that people use their tax-free savings money, or rather the growth, is things like saving for their child's education, graduation gifts for when your child is done, you know, give them some money so they can buy an apartment or a car, set them up, you know. Other people also use it as a house deposit. Others will buy cars cash. Others will even use it to pay for their weddings, which I feel like I slept on, but it's okay, it's okay. But let's continue. I want to tell you guys some of the things that you need to be careful of, because tax-free savings accounts, great, okay, until they're not. But let me tell you what you guys need to make sure that you're just having positive vibes coming to the tax-free savings account. I want to talk about some of the common mistakes that people make when it comes to tax-free savings accounts, and you're gonna want to stick around for this. Like this is important. If you've forgotten everything I've said, stick around for this. So the common mistakes that people make around tax-free savings account is that one, people think they're still within limit just because they haven't received a notification saying, hey, you maxed it, thank you, stop. So they just keep contributing. Guys, you need to do your own checks. Secondly, a lot of people will open tax-free savings accounts with different entities, okay? So you'll have this company and then this company and then this company, because you think you have a limit with every company. You think, oh, 36,000 here, 36,000 here, 36,000 here. No, don't do that. Guys, please don't do that. Remember, whenever you're signing up for these investment products, or whenever you're signing up at your bank or whatever, they always use your ID number as your unique identifier, and your ID number is linked to your tax affairs. So at the end of the year, when SARS or any tax authority is actually looking at how much you contributed towards your tax-free savings account, they will get flagged, because they'll see that, oh my word, this ID showed up here and over here and over here. So you thought you were outsmarting the system, but now you actually are going to get penalized and pay a penalty tax of 40% on the extra contributions that you've made that are in excess of the 36,000. But I want to show you guys an example, because there's also this confusion of where people use it for short-term savings, where they think, oh, let me take out some money and I'll put it back, not realizing that every time you contribute, it counts as a new contribution. It doesn't count as replacing. Okay, for example, let's say you have contributed 30,000 Rand this year, and then you take out 10,000 Rand for an emergency. Something has happened, you need the money urgently, you withdraw. Later, you get a bonus or you get more money and you want to top up your contribution. So you know you had 30,000, you took out 10,000, which means, you know, intuitively you think, oh, 20,000. So you top it up and contribute 16,000 so that you reach your 36,000 limit. Wrong. Do not do this, because now you've actually exceeded your limit. So the 30,000 that you had already contributed, fine. Then you took out 10k. Nobody cares. Nobody cares how much you're taking out. But that extra 16k you put in is now going to get added on top of that 30k. So in total, you would have contributed 46,000 Rand, meaning meaning you are over by 10,000 rand. That 10,000 rand that you took out does not cancel out your contribution. It just counts as a normal withdrawal, and yeah, you've exceeded the 36k limit. And unfortunately, in this case, you do get a penalty of 40% on the excess, and that's a lot of money, guys. That's like almost half of your money just gone to waste, gone towards tax. So please don't give away your money for free like that. Like it's not worth it. If you feel like you still have more money but you've exceeded your contribution, that's the time where you actually look at other normal stocks, other normal investment things that are not tax-free savings. Okay? Alright, please. If you don't hear anything, at least hear that. If you're still watching, comment Lomaku Learning, just so I know you're still tuned in. Alright, so where to sign up for your tax-free savings account? Okay, there are various investing platforms that offer the tax-free savings account. So one of them is Frank, but there are others where like it's Easy Equities, Satrix. Your banks will also offer it. Your different insurance companies will also offer it. So you can actually really look and find whatever pleases you. What I do encourage you though is be careful. Okay, don't open too many apps, because your limit is still your limit across all of them, and sometimes people will open here and here thinking it's a new limit. No, you'll get caught out. And also there's Stash by Liberty. I remember I was a bit upset because a lot of people thought they were just stashing small money and it was just cute and all of that, and then they'd use that money because like, oh my god, all the change I've saved, not realizing that Stash was actually part of their tax-free savings account. And the thing is, once you've withdrawn money, when you recontribute, still adds onto your contribution limit. It doesn't feel like a substitution, if that makes sense. So be careful about that. But in closing, because I want to wrap this video up, I hope you guys have enjoyed this video. I personally wish I had taken advantage of tax-free savings accounts a lot earlier than I did. I think when I first heard about them, I was confused because they used to refer to them as TFSA and ETF. It just sounded confusing. It just sounded complex. I was just like, I'll get there when I get there. When I'm there, when I'm older and wiser, I'll look into it. So if you have learned something, let me know in the comments. And if you've enjoyed this, please do tip me with a like. And I will catch you in the next video. Bye!